Hello. Thank you for joining us for this special training series collaboration between the National Good Food Network and Farm Credit. As NGFN webinar devotees may have already noticed, I am not Jeff Farbman. My name is Will Gray from the Wallace Center at Winrock International, and I'm filling in for Jeff today. Basic bookkeeping and financial management acumen is necessary to recognize patterns and key ratios that enable food system business operators to make smarter, more effective decisions. This is part one of our 5-part training series exploring how to effectively manage financial reports, including common chart of accounts, balance sheet, profit and loss statements, and cash flow statements. Using examples gleaned from Farm Credit's extensive experience, this series will explore the theory and practice of financial record keeping as applied to effective food business management. Before we get started, I want to let you know that this webinar is being recorded and archived on our website. It will be available along with this presentation for your future reference, as will all of the other presentations in this series. So we hope you can join us for the next few weeks at noon Eastern, but if you can't, please check out the address at the top of your screen, ngfn.org/hubfinances. As always, you can contact us with any questions or comments using the email at the bottom of your screen, contact@ngfn.org. Towards the end of today's presentations, we'll be answering some of your questions. Over in the control panel is a questions box. You're all muted during this presentation, so please use the questions box to type in your questions for our presenters. I will ask as many questions of our presenters as possible during that section of the presentation, but I encourage you to get your questions in whenever they occur to you. Last but not least, please complete our post-webinar survey. It'll pop up automatically after we finish. It'll take just a minute, and it really helps us understand what we can do to make these trainings as valuable as possible for you. So, let's get to it. I'm happy to introduce our trainers today, Gary Madison and Aaron Puro. Gary Madison works for the Farm Credit Council in Washington, D.C., which is the trade organization of the Farm Credit system. Farm Credit is a nationwide network of borrower-owned lending institutions providing credit for the nation's farmers and ranchers. As the Vice President for Young, Beginning, Small Farmer Programs and Outreach, Gary seeks to identify and meet the needs of the next generation of farmers and ranchers as part of Farm Credit's enduring mission of service to agriculture and rural America. Until recently, Gary was a small farmer operating a wholesale greenhouse business in New Hampshire, including raising cattle for the local freezer beef market. He holds bachelor's degrees in agronomy and biology from the University of Connecticut. Aaron Puro is a farm business consultant and vice president for Farm Credit East, the Northeast's lending financial services cooperative for agriculture. Her work is centered on successfully helping customers analyze their businesses from many angles in order to pinpoint methods for improving their profitability. In addition, Aaron leads First Pioneer's Agricultural Retail Benchmark, which is a comprehensive program of data analysis and benchmark reporting, as well as a customized seminar and consulting business for owners of farm businesses, garden centers, nurseries, wineries, and other ag retail businesses. Erin received her undergraduate degree in resource economics and her master's degree in agricultural economics from the University of Connecticut. Erin's family farm raises and markets Connecticut-grown lamb and provides shearing services in southern New England. Take it away, Gary and Aaron.
Thank you, Will.
Thanks, Will. Hey, the purpose of this webinar is to show how having a common chart of accounts can help Food Hub managers better understand the financial performance of their own operations. We will also describe this common chart of accounts as a way to establish a baseline of information about your business, presented in a format that will allow you to get the most out of the Food Hub benchmarking study. The most recent Food Hub benchmarking study was done in 2015, and the next study will be done in the early spring of 2018. So making a conscious effort now as you begin your record keeping and accounting for this year's operations, that will allow you to structure your financial information so that you can compare your Food Hub's performance to others in the benchmarking study. Anonymous comparison to others will help you manage your business with clear goals in mind.
So what is a common chart of accounts? As you saw from our slide graphic, we're going to slice and dice your numbers in a lot of different ways, just as you are when you're analyzing your business to look at different methods of efficiencies and profitabilities. So the common chart of accounts gives us a goal of providing a common language for the entire industry. It then helps us align all of our accounting systems within that framework so we're speaking the same language. There are 3 major reports that you'll pull out of your accounting system to manage with, and countless others depending on what specifics you're looking at. But the 3 basics are the balance sheet, also known as the statement of net worth, your income statement, or profit and loss, and the statement of cash flows. And if we have standard categories within each of these reports, then we all know we're talking about the same thing. For instance, when I hear 2 food hub operators comparing how much they spend on labor, often one is just considering the cost of wages, where the other one might be including wages but also payroll taxes, which might be in the tax line, not the labor line on the first example, or workman's compensation, which is going to be in the insurance line in some other operations. So knowing where all of these should go within a standard framework helps make sure we're comparing apples to apples across different businesses. And then that helps us make better decisions about the efficiencies within our businesses.
So to put it all in one place, here are some good reasons to use this common chart of accounts. And the first is for management purposes, to really understand, as the example Aaron just used, to really understand your labor costs. You need to know exactly what factors your chart of accounts is aggregating under the cost of labor. It also, this common chart of accounts allows for flexibility, because you can use subheadings, subcategories in your chart of accounts to be able to include the things that you think are important for your food hub. For instance, particular departments of sales that you might use, like produce or proteins or any other more specific information. And that will allow you to participate in the benchmark very effectively, because you can have your own headings in your own chart of accounts, but overall you'll be able to align your chart of accounts so as to be able to benefit from the benchmark study.
You'll also get to know the true cost of labor, as we just discovered. You'll be able to make decisions strategically by pushing a pencil on what makes the most sense for your business. You'll be able to back it up with communication among other owners and managers, and you'll be able to consider alternatives that give you the best results for your business. And these are unbiased, objective results when the numbers are doing the talking, rather than the one that would make the most sense for my project or your project. And at the end of the day, we need to earn profits to support our mission. Having this chart of accounts helps us know what are we making money at so that we can continue to do the things that we've set out to accomplish. The hardest part of working with a common chart of accounts is really the mindset. You see, so many of us set up our accounting systems in a way that is meant for tax compliance. But think about it. How often do you do your income taxes? Once a year, right? But you need to manage your food hub every day. And by grouping the information within this common chart of accounts, you can really pinpoint the things that make a big difference and not have to worry about the distractions of the things that don't matter from day to day. For instance, insurance. Barring a catastrophe, your policy premium probably only changes once a year. So as long as that's on budget, that's not something that you need to worry yourself with every day, whereas you do need to worry about margins from different departments within your business. Putting your numbers in this common chart of accounts helps make sure you're using the right tool for the job, because you don't have time and you don't have energy to waste on this. You've got to spend it elsewhere.
Assets are the things you own or have control of, but it's important to know what you own, all the things you have, your stuff, so that you can take care of the things you're responsible for. That's why understanding your balance sheet is so important. So in this calculation, in this simple equation, liabilities are the things that you owe other people: loans, accounts payable, leases, and so on. If you take what you own or control and subtract what you owe to other people, you're left with your net worth. Another way of saying net worth is wealth, or the sum total of what you have if you were to pay off all the bills and all the loans today. What do you have left? balance sheet is really a snapshot in time. It's a report of your net worth on a certain particular date. So it's important for you to be able to see progress, for you to have an accurate balance sheet, certainly as of year end, but also through the course of your selling season. You want to know your net worth if you're going to be able to understand if you're making financial progress over time. So a series of balance sheets over time is really what we're talking about for having an adequate balance sheet in sequence rather than just once a year. So let's look at this 5-line income statement on the right-hand side of this slide to understand why knowing the difference between variable costs and fixed costs is important. The basic formula is sales minus cost of goods sold equals gross margin minus overhead equals net margin. So why is gross margin important? Well, gross margin is a way of measuring how efficient you are in your operations. Gross margin is cost of goods sold subtracted from total sales. In other words, if you sell $1 worth of product and it costs you 60 cents in supplies to make that sale, you have 40 cents left over to pay for the stuff that you need to have in place, like the building, insurance, and other overhead costs, whether you sell 1 case of tomatoes or 1,000 cases of tomatoes.
As we dig into the income statement, we're going to look a little bit closer at the things that make up income. Often when we look at this, I see a combination of what we sold, where we sold it, such as at a farmer's market, when we sold it, meaning through the CSA, and how we sold it, wholesale or retail. And that's real hard to get a handle on the combination of these different things, what's making money. By focusing on what we're selling, whether it's produce or proteins or value-added products, we can get a much better handle on how that's growing within our business and what it actually takes to create that income. Some hubs offer processing, some get paid for other miscellaneous activities. It's also important to make sure that we've got any discounts counted, because if we state a price but then sell at a volume for a lesser price, we need to know what's really coming in for that product. Now, comparatively, we need to know the cost for each of those departments. So if you have sales of produce, then you need to have the cost of produce, whether you bought it for resale, whether you're growing it yourself. If you match these to the sales categories, you can then calculate margin and know how much are you getting out for every dollar that you put in. You'll also want to have labor included here, whether or not you grow it or you're processing it or just selling it. There are other fees like packaging or merchant fees, those that are charged by the credit cards for the privilege of doing business, that all count in the cost of selling. We should also be looking at delivery costs, because the only way to know if that's a wise thing for us to do in our own business is to know what it truly costs. Now, we can't all be good at everything, so by looking at these individual departments, we can then make decisions about, should we fix it if it's not making money? Should we continue it because it absolutely is? Should we discontinue it because it's not something that makes sense for us anymore or we're not profitable at it? Or do we decide, you know what, that's part of our mission and we're going to do it anyway? If we decide that to be the case, we still need to know how much it costs us so that we can figure out where that money is going to come from.
And all of those costs that Erin was just mentioning are all, and all of the sales are all stacked on top of the overhead costs. If you think of overhead costs or fixed costs as those costs that exist whether you sell 1 case of tomatoes or 1,000 cases of tomatoes, you're going to have that same cost of doing business. For example, if you have to pay rent for the building, whether you sell 1 case of tomatoes or 1,000 cases, and it's the same rent. The cost doesn't go up the more you sell. The same happens for things like insurance, taxes, repairs, interest, and depreciation. That's what this mnemonic of DIRTI is all about. So you can think of overhead expenses as being all the things you have to have in place, like the building to house the food hub, before you can even think about buying the produce and the meats or the products that you're going to sell through your food hub. Again, looking at the categories on this slide, administrative labor is going to be separate from the labor for actually selling the product or delivering the product, because administrative labor is going to happen whether you sell 1 case of tomatoes or 1,000 cases of tomatoes. It's going to be that person sitting there making sure that your accounting gets done. The same with all of the other points on this slide.
Hey Gary, sorry, could you repeat what DIRTI stands for one more time?
Sure. DIRTI stands for depreciation, interest, repairs, taxes, and insurance.
Thank you.
So things that are outside of your normal operations, not meaning not the food hub business, not buying and selling produce, are what you should consider keeping separate under other income and other expenses. So you can really distort your financial performance, for instance, if you counted grant income as sales, because you didn't actually sell that amount of money that you've received. It was a grant. So keeping other income separate or from other enterprises allows you to focus on the profitability of the food hub as a business itself, and keeping other income and other expenses separate from your food hub's operational costs is a key to understanding and being able to compare your food hub to other food hubs. Grants are a great thing, but don't let misapplying that in your chart of accounts lead you to think you're running a profitable food hub because of grant money.
And likewise, once we start to look at the overall combination, we're going to be looking at the net operating margin, which includes the business activities as the going concern. So that's income and expenses related to the food hub activities. We will also be looking at the net margin because that is the total performance of your operation. That's going to include those other income and expenses that Gary was just talking about. And the reason we separate those out are, just as he said, we want to make sure that we know how the business is doing as a going concern, yet we don't want to discount all of the other things that are taken into account through the mission of the food hubs. These can get mixed pretty easily, and we want to make sure that everyone has a good understanding of what it takes to accomplish every piece of what the organization commits to. The last report we'll be going through is the statement of cash flows. It's where we chase the money, both in and out of the business. And this report explains things that are not on the profit and loss statement. So it'll look at sources of uses of cash within the company. So if you extend accounts receivable to someone, meaning they can pay you later, that's cash you didn't get. Likewise, if you run up an accounts payable, that's cash you didn't spend yet, but really needs to be taken into account in the overall earnings of the business. We'll be looking at investments. So are you buying equipment? Are you selling off assets? Those are other uses and sources of cash to be considered that aren't necessarily income or expenses. The same goes for financing. If you're borrowing money or you're repaying it, that's neither income nor expenses. If you're getting investors to partake in part of the food hub, that's also something that would be explained on the statement of cash flows. So that's the last one that we'll be going through. And as we go through this series of webinars, we'll be looking at each of these reports in depth, and then we will wrap up with a webinar that talks about how you get the most out of these tools, not only on your daily basis, but also looking at how you can use the benchmark study that's coming out in 2018 to make your food hub even more profitable. And Will has just popped up these sessions that we are looking forward to. Today was the introduction and common chart of accounts. Next week, we'll look at the balance sheet, how and why you want to keep track of this. I'm a big fan of looking at this one. You'll hear me talk about it next week. My husband husband and I do this as a date every New Year's just to see how we're progressing on our farm. Then we'll take a look at the profit and loss statement, the next week the cash flow statement, and then we'll put it all together at the very end. Hope to see you there.
Wow, thank you guys so much, and thanks to everybody for participating today. This discussion of Common Chart of Accounts is great, and it really lays the foundation for all the work we're going to be doing together in the coming weeks, and we're looking forward to that everybody can join us. We've got some good questions already. Please keep them coming in if there's any other clarifications. But one to start out with, in the spirit of sort of common language and management versus compliance, is there a clear practice for how to establish cost of goods sold? And in particular, what's the role of things like manufacturing overhead, like facility rental or production space, things that definitely aren't sales related and aren't administrative, or things like freight or plastic gloves? Does that go into your cost of goods sold, or do you treat that as overhead?
Wow, great question. You want that one, Gary, or you want me to take it?
Go ahead.
I think first and foremost, we want to start at the simplest level. So I like to ask folks, does this vary with the amount of work that I do? So if we're going to be doing a lot of more production, some of those things are going to increase, like freight, because either that's stuff coming in that you need to pay more for, the more product you bring in, or if you're delivering it yourself, you're going to end up doing more of that. The manufacturing overhead, while that could go either way if you're looking at it in the cost of production, for the most basic level, I would put it in overhead. And then, depending on your company's sophistication in your record-keeping systems, we could definitely take that another step. But for the benchmark, we're going to start with the most common denominators, just separating overhead versus cost of goods and cost of production from the consumable part of it.
Okay, great. Also had a question from Lisa about accounting for taxes and all of this this framework, particularly because of how to handle making sure that you have appropriate cash flow come tax time. How should that be structured into this setup?
Say that last part again?
Yeah, just how does that get factored into this equation?
Okay, well, if we go back to the slide of the other, business income taxes will end up being an important part of it because they definitely need to be accounted for. But there are a lot of influences on income taxes that have nothing to do with business performance. I mean, basically, if you make more money, you'll end up paying more income taxes, but your investing activities may give you an offset to that. You may have prior year things carrying forward. You might be a 990, filing a 990, as a nonprofit and not have income taxes. So while it's not part of ongoing business operations in the main business sense, we do want to make sure that we keep account of that because, as you said, it's so important, not just for cash flow, but to know where you are in the grand scheme of things.
Great, thank you. I'm going to move us to the bottom line slide because I know Rosa was hoping to see that again. And while we're looking at this, I'm going to ask another great question from Christine. How do we handle spoilage or shrink? Is that something that increases? Do we factor that into our cost of goods, or do we treat that as an expense after the fact?
Yeah, great one. So that's going to be part of your cost of production. Because if you think about it, for every dozen jars of tomato sauce that you send out, if one breaks, those 12 that you sell have to carry the cost of the one that you produced. And you have all the raw materials of production in there. So if you're just on the most basic level keeping track of the inputs, that'll be included in there already. If you're ready to take the next step and add a level of complexity, you could, at the time that it is declared spoiled or shrink, you could make that a separate account within your cost of goods sold. So it's up to you which level you're ready for.
And I would add, Erin, to that, similarly, if you're going to be giving discounts because of volume, for instance, that would be treated in the same way.
Great, thanks guys. I'm going to zoom back to this schedule slide for just a couple last points. Aaron walked us through some of the great programming we've got coming up. I also wanted to add that each of the following sessions, balance sheet, P&L, cash flow, and putting it all together, we're going to be pairing that with dedicated office hours where you can work through follow-up questions or particular issues with our colleagues from Farm Credit. And that's they're normally going to be hosted the Thursday after each session, and will also begin at noon. The one exception is going to be the very last one. That's going to be hosted the Wednesday after putting it all together.
So, Will, let me add a bit to that.
Please.
The idea here, for instance, for next Tuesday's session on the balance sheet, you certainly are going to be able to ask questions as a participant, just like we're doing now. But then hopefully you go back to your accounting system and take a look at how you're doing things relative to your balance sheet. And then 2 days later, after you've thought about it and poked and prodded and asked questions and scratched your head, you get to come back on a webinar that is going to be just your questions. So we'll have a few test questions to get us started. But really what we're hoping to do with these office hours sessions is allow you a chance to reflect on what you heard in the webinar, and then in your own mind be able to ask, or out loud, I guess, to us, ask questions so that you can see how that information fits with what you have to do in your own Food Hub business to produce a balance sheet or a profit and loss statement or a cash flow statement, each in turn.
Great, thank you, Gary. And I know we have a couple more questions that we unfortunately don't have time to get to today. Please follow up via email so that we can make sure we can get everything taken care of. We want to get you out of here on time because we really appreciate you guys spending what, at least on the East Coast, is our lunch break going through some of these fundamentals of financial accounting. You can find the National Good Food Network on YouTube, on Twitter, and on our website, ngfn.org. And the Wallace Center is also on Facebook. Come like us. Search for Wallace Center at Winrock International. Again, if you haven't already, please sign up for our email updates. There's a link at the top of that ngfn.org homepage, or just let us know on the post-webinar survey that's going to pop up, and we can sign you up automatically. Please, again, contact us at any time. Email address is contact@ngfn.org. Once again, the NGFN would like to thank you for your time today, and one last time I'm going to encourage you to fill out that survey that'll pop up in just 1 second. Thank you guys so much. This concludes the webinar.